Good afternoon, this is Tucker, and welcome to the July 29th video for Simpler Stocks. Chris is still on vacation. Hopefully he's having a wonderful time. And for those of you that are Simpler Stocks members, I do videos a little bit differently. You should just watch the members video, because what I do is I have the free video in the first half, and then I just extend it on and make it the second half for the members. Reason I do that is then you only have to log in to one video and watch one video. So it just seems simpler to me. So we're in the peak of earnings season right now. So I just wanted to spend a few minutes on that. And what you see are 8 charts on my screen. These are the symbols that I look at daily on a regular basis. First one's Apple, Amazon, Chipotle, Facebook, Google, Netflix, Priceline, and Tesla. So let's go look at Facebook. So last night, you could see toward the close, Facebook was hitting some recent highs and then had great earnings, exploded up, and then actually pulled back down. Tonight, after the close, we had Amazon. Amazon announced, you see it pulled back all the way down to 722, and then has been as high as 775, and that's after hours move, and that's just in a few minutes. So, and it's held up pretty well through the after hours. You can see it ran right into the tree line at 769.12. So it may have some trouble getting through that tree line. We'll have to see if it can carry through the momentum tomorrow at the open. One thing I wanted to show you on the options is one of the plays that John likes to do is go get out of the money options and let the implied volatility take over. So if we look at the, let me circle the right one. If we look at the 800s, this implied volatility was a little bit higher than this even going into the close. And I think it was around 144 when I looked at it a couple minutes before the close. And the strike prices on this were around $6.70. I know for a fact 2 days ago that these were about $3. So they more than doubled in the last 2 days. 2 reasons. Implied volatility went up, and also the price went up too. But the big price move has been after the market close. That's a strategy you can use around earnings. Just make sure it's something that's traded with high volume, and make sure it's something where the implied volatility moves up as it gets closer to expiration. The key to doing that strategy is to sell them before the earnings announcement, because after the earnings announcement, you'll see this implied volatility just drop dramatically, and that means your premium is going to drop dramatically. The other earnings announcement after the close was Google, and you can see here, had a big move from around 762 all the way up to as high as 820 before pulling back a little bit. So expect Google to hold up at the open tomorrow, and we'll see what happens. It may pull back to the snow line here around 794. Couple that are coming up next week, and John's going to be covering in the sessions on Tuesday, Wednesday, and Thursday, is First Solar. And let's just go out here on a daily chart now. And you see it's moved up a little bit here over the last few days. If we can break through this resistance level around 49.25, we could see it move up a little bit too going into earnings. Tesla announces on Wednesday. You see it's running right into the fire line. And then Priceline is the other one that you may be interested in. If we go look at next week's options for Tesla, and we look at a delta around 20, which would be a strike price of 250, you can see that that implied volatility is 63.7 right now. So we could see that move up, and we get a run up in price. Also, you can see a nice bump in that premium. Go look at Priceline. This one I'm not a real fan of. There's no volume in the options. Over on the call side, you can see the volume is real low. We go over to the put side, the volume's real low. This is not one I would choose to buy options going into the earnings. There's just not enough volume. Really need to do that with something that has high volume. Let's go look at the overall markets. Let's look at SPX. Over the last 11 or 12 days, this is really trading in a very tight pattern. I mean, we can just draw a little box here. So be careful. If it breaks above this, we could see it go to the next level. If it breaks down underneath this level, we could see it at least fall back to around this 2113 range, because there's really nothing holding up price if it breaks through these lows here. So keep an eye on that. I want to give you a heads up that Carolyn, the Fibonacci Queen, is doing a webinar this Saturday, July 30th. It's going to be on precision timing, and it's going to be from 1 p.m. to 5 p.m. Central. So if you've been following her work, wanting to learn more about it, this is a great opportunity to accelerate your learning curve, and a 4-hour webinar for only $197. She's going to show you everything about timing, how to identify major reversals. She's going to show you exactly how the timing techniques work, how to apply it to your analysis. She'll show you timing points in the coming week, show you how to use calendar day timing, and how to combine Fibonacci price and timing analysis. So if you want to attend, let me bring up the link for you. All you have to do is go out to FibonacciQueen.com/timing. Hopefully this has been helpful. Have a great evening, and we'll see you on the next video.